Now we are heading towards a very important topic, that is evaluation and risk models. We are going to quantify our risk methodologies and management. This book is really interesting. It's as full of valuation methods, starting from how we quantify volatility, the fluctuation and changes in the value at risk models. Moving forward, how we put VAR at the real work, like JP Morgan started this, and how they are calculating and what other stuff we need to know in order to make it effective in the workplace. What are the measures of financial risk, like related to money matters in terms of financials. So this is, we will discuss binomial tree concept, where you have a decision making arrangement. So we will make trees and it will be an interesting exercise. We'll discuss this Black-Scholes-Merton model that is really very popular in the industry, how it works. We'll see the Greek letters like gamma and other stuff, price, discounts, factors, and arbitrate. Arbit discussion we have already done in terms of APT, arbitrate pricing model, in terms of discounting, in terms of time value of money. These all we need to discuss in detail today. Anything today in terms of rate is your spot. Today is a spot rate. In future it will become a forward rate. And what is a par rate? So we will discuss the face value, real value, legal value. What is the concept of return, spread and yield? How we calculate yields, holding period yield, and related to time and related to returns in terms of accounting. This is all is covered here. One factor risk matrix and hedges. Hedges I already explained in detail. It's offsetting your risk against adverse price changes, and by using a concept of a matrix where you have rows and columns, where you have more ability to have a decision. So what are those? I will explain here. Then we will take multi-factors, where only not one factor, there are a lot of more factor is creating risk, and how to manage that. This is in a multi-factor atmosphere. This is really interesting and very useful. We'll see country risk. Country risk is very important because it can create a premium or a discount situation. Some countries, they are really good. Their social structure and infrastructure and financial industry is mature. They have transparency in operation and transactions, so it are subject to less country risk. But there are a lot of countries who are still inefficient. Their transactions are not clean. Their banking system and other systems are not efficient. So it creates an extra country risk for us. So how to handle, what are these determinants, how we measure, and what are the implications? This is what is the scope of discussion. We'll discuss external and internal ratings. Ratings, AAA, BBB, how to add rating, how to reduce rating, rating quarter-wise, monthly, who are the rating agencies, how they work, how they rate, what's their mechanism. This is really important to understand. Capital structures in bank. We can discuss Basel 1, 2, and now 3, how it works, what are the requirements by Basel, and how much capital they need to maintain. This is what is in capital structures for banks. Operational risk are day-to-day. When we say operational risk, any risk that is into day-to-day transactions we encounter because of multiple factors. What are those factors, how it works? This is we will discuss in detail. Stress testing is a very interesting term. Generally, when we hire an employee, we give a little bit tough time. to check their nerves are strong. So I called it as stress testing. Sometimes we give our existing team more work and we want to see that how they work under stress conditions, because stress you can't avoid, it will come. Same way today, if I'm lending to my client, market is very good, everyone is lending, we are also lending, but what if the market will drop, situation will get tight, liquidity issue will arise, then how things are, financials are going to move? This is stressed. We will see stress testing for assets, for mortgages, and for I think stress testing is a very efficient tool in terms of theoretical concept and in terms of mathematical concepts, how we do stress testing. This is really important and it's very, very practical. Then we will discuss the principle for sound stress testing practices and supervision. What are these basic principles and how we are going to adopt these practices and what kind of supervision is required. This is the scope of our discussion. I will continue with the detailed discussion. We will start with value at risk methods and we will see the concept of delta, normal, var, how it works. Always the statistical methods are always followed by a binomial distribution. It's like a bell-shaped distribution. Those who have a statistics background, they can easily understand. We have mean, we have mode, we have median. What are mean, median, mode? This is require a discussion. And what is the bell-shaped distribution? There are some basic terms we should know. Confidence intervals. We'll check these distributions based on 1%, 5% and 10%, and this is what I'm going to draw for you, and we will go ahead with more discussion about the binomial distribution, which is leading towards certain kind of methods and analysis.